The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Wednesday morning, we got a big webinar tonight. Tom and I are going to do something at 5:30 into 6:30. Might last a little bit longer. I hope it does. We're going to try to cram a lot into this thing. How to use this scanner. What's the first thing you do when you sit down with it? How do you read it? What's the basis of it? How does it benefit you, hopefully? And how does it hopefully get some high probability setups and trades right on the desktop quickly? So that's kind of what's in store for later today after Tom's late show from 3 to 5. And the way you get to that is to sign up for a demo of the scanner on the front page of the TFNN website, and it'll automatically put you in the hopper to get a username and password to get into that webinar this afternoon. Want to check to see if we have Eric on this morning with us. First thing, Eric, are you there? Maybe not yet. Not yet, guys. All right, maybe soon here. Hopefully in a little bit. So first thing we're going to do is we're going to look at the, I heard some, no charts. Let me just make sure we got our charts here. Let me reset those. Are we good? Okay. Are we good, Al? Okay. All right. So the first thing we're going to do is we're going to, I heard some, it's just incredible how things change so quickly these days in these people's minds that are on, the portfolio managers, the guys who are yapping on TV. This guy came on today. It was the same guy that said, oh, there's a catastrophic event in China, blah, blah, blah. We've talked about this may be a mechanical problem, basically, when you boil it down to it. Al, do you have charts or not? Can I get a yes or no? I just want to. Okay. All right. So what I want to do here is basically look at the Shanghai chart, and some of the comments now are, oh, it's compartmentalized. Seems like they've got it under control. Well, government intervention will kind of surpass seemingly just like, we did it. The Europeans are doing it, things like that. It will rig a marketplace, no doubt about it. But to hear some of these guys, quickly change their tune, I mean, it's amazing. I mean, 2 weeks span, you've got catastrophe in China, and then, oh, it's compartmentalized, it's over. I mean, how can somebody even say that? So here's the situation on the Shanghai. We've had a new profile up here, and you've got some ETFs you can trade this on. Here's the situation on the, let me go to the long term first. So the weekly chart looks like this. We're still, technical damage below 4,200. We talked about that was probably the rally back point to look at this from the short side again, but we may have some little pops here based on, so-called government intervention. Here's the daily chart, and here's the numbers we had to be aware of. When we got back above and across 37.38, that was, okay to maybe start looking at this from the contra trade north possibilities. Now we've come back and hit that to the tick, basically on a little bit of a pullback after we rally. We're consolidating. I'm taking this as consolidation. I think we're going to actually rally a little bit higher here, mainly back into 4,200. So now you've kind of crossed the border, and we're coming back and retesting that cross the border. So now 37.38 is going to be that intermediate support on this to concentrate a little bit higher, in my opinion, and that's the way we're looking at it. So I think we're having technical problems with Eric, so let me try to See if we can fix that with Al here. We'll keep moving forward. Just keep us posted, Al. Thank you. We'll try them after the first break. How about that? We'll just keep marching forward. So Shanghai we've covered, and my stance on this basically is based within the scanner also. I'm going to pull up our scanner. We're going to take a look at some of the breadth situations on the Shanghai. But as the scanner pulls up, we're going to talk about a couple other things going on. We're going to look at the Nikkei because some of the news out in Japan right now, and I stay in tune with quite a few folks over there, had obviously a huge rally. Here's the inflection points to pay attention to on the Nikkei now, 2660 unfair highs. Little bit of a I don't have time to look at all the comments right now from the tech side, so we're going to keep moving forward till the next break. So what we're looking at with the Nikkei here, and here's the 240-minute chart. I think we can reach a little bit higher to reach that top inflection point on the daily, and guess what? 2660 is very coincidental with this 2725 on the weekly. So here's our unfair highs on the Nikkei weekly. So that's going to be, in my opinion, a little bit of a selling point. We had some more relaxed than forecasted data coming out of Japan, so a little bit more slowish, downish, if you want to look at it that way. That's going to more than likely affect a little bit, even more so than what the course of action by the Bank of Japan was already doing, looking at the yen trade. And we talked about hoping that this would consolidate, just using the unfair highs 123.39 as a target-rich environment on the Japanese yen. I love this trade. You guys watch this show, this is my favorite situation. So you want to see this thing as it reaches these unfair highs. You want to see it, if you're a little bit more long-minded, you want to see it consolidate around these levels. And that's why we're talking about, and it's not the time to short this. It's really never time to short the yen as it stands right now in my mind. But I love the way this thing is looking here. It's kind of starting that spring-loaded action, in my opinion. And if we consolidate around these daily unfair highs, 123.39, I think this thing could actually move forward, considering that the data is not as good as they wanted it to be. Bank of Japan gives itself more reasons to do what it has to. And, the yen against the dollar should devalue even more. Okay, so that's the situation on the yen. We've talked about the S&Ps. I'm going to pull this up, and I've been bearish-minded relative to this particular situation. And now, actually, our weekly is starting to get right in the balanced state. I'm going to pull this breadth chart up. We're right there with basically 141 above, 141 below as of yesterday's close on our weekly, and 211 in the middle. So one of the things I want to say is, and here's our daily situation on our breadth. It's now crossed to positive. One of the things we want to talk about is when we try to pick battles based on the breadth, around last one was 2092 rounded off, we got to put stops in. And when this thing closed above and, kind of came back and then started getting back into the balanced area more so, you got to put stops in. And as a trader, you're never going to always be right. We're going to take high probability stances, in my opinion, on what we talk about. But if you've ever, this is a great, we always talk about lose a little, make a lot. But if you ever want to see how bad things can get if you don't play stops, go watch the film. It's not a blockbuster thing that's out there, and they never seem to show it on TV. It's called Rogue Trader, The Rogue Trader. It's got a guy named Nielsen. I forgot the actor's name, but it's about, the Barings Bank debacle as he was continuing to short puts on the on the Nikkei itself. So that got out of hand. It actually ended up blowing up a bank that actually had done the Magna Carta for England. That's how old the bank was. And basically, without having stops enforced and calling it a day, the guy blew up the bank. And it was all hidden and very confusing at the time. There wasn't the communication and awareness and risk stances in place like they do today. But that amount of money ended up being, I think, $7 billion. And it's just interesting that today Celgene spent $8 billion to buy out another company. So that was back in the 80s. And it's just amazing how the price of money has changed. And I was just remembering that this morning as I was looking at this thing go in the direction that I didn't think it was going to go in. We've got 2106 sitting here, POC on the daily, and obviously a big number here on the weekly, 2104. Now, one of the things you have to do as a trader is you can't get stubborn, and you can't continue to, hey, this, if you started this process on the S&Ps 3 or 4 years ago, you definitely can't hang on to situations like that. You've got to be willing to say, you know what, enough's enough. We got to say uncle, got to regroup. And that's what I'm doing right now. I'm looking at this next level, 2104 to 2107, the POC on the daily. I think we've still got a situation on our long-term breadth where I'm willing to still say that on the long-term weekly, I'm trusting this indicator highly. We haven't crossed over. We haven't closed during the week. I'm still looking for opportunities to try to pick a battle on the short side. Now, we tried 2075 late. We've made some good points on this on the downside, and we caught some really good moves down, 30-point winners, 40-point winners. But as we take these 2075 stance on the short side, 2092, those two were chop-offs, and now we're looking at the 2104 and the 2107 area that I'm personally going to look at as another opportunity to try to pick some points up on the downside. We've also talked about staying out of the market overnight right now. You could have news out from Greece, news out from China that can affect things in a big way, as you've seen 20 to 30-point gaps either way. So a little bit of a unique situation going on right now, but we're going to keep turning the wrench the same way. We're going to wait patiently until these inflection points that we talk about that are delivered in the scanner are approached, and we're going to try to take, a trader's stance on some of these. From an investor standpoint, it has not been buy the dip territory, in my opinion, from a lot of the things that we look at. So I think this market's still going to rattle around. I think there's going to still be trading opportunities, and I'm still looking at this, trying to sell some inflection points as the market comes to us on some of the profiles and the information within the profiles. We'll be right back, guys. Hopefully we'll have Eric hooked up, and stay tuned.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I think we've got Eric Courtney with us. Eric, are you there?
Good morning, John.
Hey, buddy.
I'd like to hear you give the overview in the initial part of the show. I think people are very used to that, and it's very helpful for them.
Great,
to get your head. So I come on and talk nonsense for a while here.
I don't think so. Did you catch what I was referring to about the rogue trader? What was his name? Niels. God, well, I can't remember his name. Do you remember when that happened, when he caved in Barings Bank?
Well, what he did is he hid all the tickets in his top drawer, and then he made a phone call to a guy in Hong Kong, and he said, "I think there's something amiss here. We're trying to find about $4 billion." Yeah. And the other guy called up Barclays and said, "We've got a bit of a problem here, I think." Yeah. I mean, they're amazing. You know, I mean, the nonsense that we have seen on Wall Street. And all you know, like I was saying to you before, if you had to, you know what I do in the morning? I have this little, my little Buddha thing here, because that helps me keep my head clear and erase all of the paralysis of analysis that I hear. Everything is in the price.
Yeah.
What you've got is you analyze the price, the unfair high, the low, the POC, the profiles. That's done very pragmatically. It's a man that reads and knows how to read the scanner and understand the intricacies and the breadth of the scanner. It requires a little bit of effort, but once you have it, you're the smartest guy on the block. You can erase all of the other nonsense. I mean, I heard shows in the last day or so, it's sad, because I feel sorry for the commentators that have nothing better to do than to continually talk about Yellen, China. You know, we know all about that. We understand that. That's in the price. It's in the price you see. China, of course, after all those years of rocket growth, is going to have a pullback, and they understand that they're not trustworthy, and they're going to work on that. They're going to straighten that out. It's too big a deal to play games. Oil is here to stay, John. Commodities have a downtick going on that could be a little longer than we want, but, you know, they've been up for a long time. This is natural market stuff. American corporations are stingy with jobs, but they know how to tap dance earnings. They know how to get the earnings up there. And we're pretty much, you know, politically and sanctuary right now, given Europe and Asia and other factors. So the money is still flowing this way. And the key is to know what the prices are and where to read those prices and how to play them, whether you're scalping on the upside or you're looking for opportunity or you're looking for problems. If you're a big investor, a hedge fund, you want to know the breadth. You want to know what sectors are starting to look a little better, what things are looking bad that could be opportunity. I mean, that's all on the price. And what you do is you study the price. And that's where all the information is. You know, we don't need to we don't need to analyze. I mean, Greece, a fact. That's out of the way now. We got a little uncertainty removed, okay, which is, I think, a very good thing. We have profits that are continuing to come. China understands the problems. I mean, the world is not coming to an end. I mean, but what makes me worried is that the cash across the board is at the highest level it's been, and it's similar to when it would be if you had a recession and almost, you know, a real bear market would be big cash. And here we have a very good market in this country, and we've got people that are the highest levels of cash. To me, that means good. I mean, they're going to have to put it to work. They're not going to buy T-bills, okay? So we've got a lot of opportunity here, but it's still back to the price, not back to some guy being lucky or not lucky, or Buffett having a great philosophy because he can throw enough money at it to make it work. We're looking at very simple price, opportunity, and you're showing that. It's not much more complicated than that. I mean, we're overcomplicating the world right now. It's getting crazy.
Well, I'll tell you what, Eric, those are very true statements. We're going to take a break, and we're going to come back. We're going to take some of those relative pricing. We'll come back, folks. Be right back.
Okay, cool.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD
and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Eric, are you still with us?
I'm still with you. Yes.
Great. How do you like I turned my outside room into our TV studio here?
Yeah.
I love being outside here. It's
nice.
Very nice feeling for watching these screens.
Done a good job there.
Hey, yeah, I put a heater and an air con in here actually. So it's,
and your teeth, your tooth problem is better. You've gotten a dentist that's taking care of you.
Yes,
so that's
old age is set in and my teeth are falling out.
Yeah, well, don't fool around with your teeth. It can be really dangerous. A lot of people I know, they don't realize it, but teeth can be a real headache.
Well, look, you've been a big proponent. Let's first of all go back to the scanner for a second before I jump into another topic. Here's our profile heat grid for the 9 major ETFs that we follow. We're adding more ETFs. Here's our daily grid. A lot of these sectors have turned positive on our intermediate, and especially this is our 4-hour.
Right.
This is as of yesterday's close. This thing actually updates. We have the breadth calculations updating on the heat map grid about every 2.5 minutes, but every 60 seconds the internals update within the filtering system. But I wanted you to just kind of gaze upon this. I mean, a lot of these worms have turned everything except the XLE, basically, which we all know about. And on the very long term, we're about split down the middle. But you've been a big proponent of the healthcare sector, and you've been preaching drugs forever.
That stupid little, Synergy Pharmaceuticals went from 435 to 975 like in a week. that we mentioned. You know, just ridiculous. I mean, look, Calgene yesterday made an acquisition, stocks up 7 points. I mean, this is going to continue. M&A and drugs is going to be huge.
Right.
Huge.
This is the talking about price action and just kind of leaving fundamentals out for a while. I mean, you've mixed the fundamentals in perfectly here, but here's the technicals on the XLV. This has been the one that, you know, we've been talking about, put a gun to my head, what do you got to buy? This has been the only thing that I've been super comfortable on buying, and that little bit of a pullback here, I just want to show everybody, you know, we got down below daily profiles, but then we were able to get our toe back in the water, and now we're actually breaking out to all-time highs. So even in the midst of the Greece, China, you know, fear factors or whatever that came in, this thing has just been insane. And now you've got, you know, some of the things. You've been a big fan of, God, what's the one? You mention it all the time. It's not Celgene. It's
Gilead.
Gilead. Yes, exactly.
Yeah. Well, I mean, hepatitis. I mean, you people have hepatitis, don't even know they have it. I mean, you know, these are a lot of kids that came out of college 10, 15 years ago, and all of a sudden they're saying, "Gee, I don't feel so good in my liver. Something's wrong." You know, they took the wrong needle. They took their, you know, this is sociology. You know, it's not hard. But
you know, we've had a little bit of a technical pullback finally on this thing. I mean, look at this. I mean, this is incredible. But you know, we pull back to when we have a wide profile, folks. And I can pull this up in the scanner, but the scanner is going to give you these levels. When we have a wide profile, you have to pay attention to this POC. Remember, this blue line is that balance point at the top of the hill. You kind of fall down one side or the other. And when we come into those in a wide profile that was emitted by way of this, you know, orange bar 2 weeks ago, you've got to pay attention to those. And those are inflection points that are trading opportunities. At the same time, we actually kind of got back above the bottom of our profile on our daily. So again, you know, this is the relative strength trade, if you will, the XLV sector. And if you go into the scanner and you drill down into this XLV, there it is on our daily. We're just ranking heat map on our daily. You just see a sea of green all the time. I mean, it's just quite amazing. And if you're going to try to, you know, find something to short in the XLV, you got pretty slim pickings here. Humana, Intuitive Surgical. There's a couple of others recently, Biogen, IDEC. But you know, just this is one. Hopefully, by looking at the scanner, would just keep you away from doing something stupid and selling. You've got way better shorting opportunities than getting into the XLV and trying to short something. But Eric, you know, I want to talk about have you been staying up to date on the housing situation and all the numbers?
I have. I've been. One of the things I was going to mention, I say, if you look at the fundamentals of the United States, and you know, the United States is looking very good because of China and Europe and other things, and it has merit to look good because we've come out of a recession. Pretty much politically, we're just stable and not a war other than the ISIS and, you know, other things. But, you know, we're going to raise rates at some point. The big corporations need a new political thrust to start hiring people with real jobs to try to help the inequality. There's going to be a huge political campaign that's going to be focused mostly on inequality. I've got some answers on that, which sometime we can talk about. But I think with housing and with the employment numbers and stuff, you know, people are going to be looking at housing, and rates are still where they are. And I think housing is going to. It's just a matter of people getting off getting confidence. The uncertainty that the press and the media have laid on people on an ongoing basis. This morning, the high cash ratio has got everybody nervous. Somebody must know something we don't know. Yeah, I know what they know. They're afraid to get back in because they suffered through 6, 7, 8, and 9, and it still is a memory. So a lot of the big money is still sitting on the sidelines. Your sector analysis is critical to the institutional hedge fund people. They need to know the breadth. They need to know a sector shift. They need to know opportunity, and they need to know pitfalls. And that's what you can give by analyzing the price, because that's where all the information is.
Yeah, I mean, we're going to actually do a couple of kind of instant analysis here in a second. But, talking about the housing and you're talking about, them kind of, it's amazing. My nephew was here this weekend, and I was like, didn't you just buy a house? Yeah, I paid $230 for it. I was like, that was like a year ago. He lives in Atlanta, and he was like, I could sell it for. I mean, he said anything that goes on the market now in that town, like, sells within an hour. And my sister said the house next to her, like, they got their offer plus 10 grand. I mean, this is all this. It's like these things go up. And I was like, man, you're 27 years old. You bought a house for $230 last year. You could sell it literally as soon as you wanted to for over $300K. And that's a little bit of a heater there. That's no mystery. People out there know this. But it's just amazing that, the housing's kind of getting back to where it was. The rates were a certain level. Now the housing is back to where it was, and rates are much, much lower. And
they start moving higher, housing is going to go even bigger.
Yeah,
because people are going to say, "Oh, we got to go now. We got to go now." And housing is a desperate need. I mean, there's no question. And I think we're much smarter about how we create housing. It used to be the builder. He just wanted to make the money on the land, and then he would add all the costs and stuff like that. But now the mathematics have changed. Yeah. So people that are smart. Look, realtors and stockbrokers are about neck and neck in terms of the tremendous regard by the public. The public doesn't trust either one, and I don't either. So, I mean, not to knock out all realtors here, but, they'll show you the first house. I had a guy show me a house next to an insane asylum in Monmouth, New Jersey one time, and I took a drive around, and I said, wait a minute, there's an insane asylum across the street. I mean, but you have to be smart.
Yeah. I said, hey, that's where I live. But yeah, I was thinking if I had another chicken or a goat or a cow back here, maybe my house will go up 10 grand in value or something.
No question. Put a couple of corn stalks up. Yeah. And listen, while you're at it, do me a favor. Try to raise some money for Cyprus to buy him a couple of neckties. The guy looks like he's coming out of a soccer match for his kid, walking around with the open shirt.
Don't get me started on that guy. He's a full-blown moron.
I mean, then you got Trump with the haircut, and then we got, these are people are listening to on the press. It's outrageous. Yeah. You got to just ignore it.
It's a different world. I mean, one of the things, like, on that topic, Eric, one of the things that has been like a total sea change with this, new generation, or maybe new way of thinking that's bled into a prior generation, is, we write apps and, point of sale systems and all kinds of things in the software outsourcing business in the Philippines that I have. And, one of the companies that we work for, they're like, we don't want a desktop. We don't want a desktop version. We don't want anything with it. We want to be total social media. We only want Android and iOS app version of this concept that we have. And I was like, are you serious? Like, nobody will want to sit down and research your information on a desktop. No, he goes, no, you don't understand. And maybe I don't understand. In this social media driven world now, people want to be delivered information. They're so lazy. They don't want to find it out themselves. They just want somebody to feed it to them, and then that's what they get, and that's what they run their life on, I guess, or whatever.
But what's missing? What's missing, John, is communication. Yeah. You and I can talk. People can talk. I talk to executives. I talk to young people. If you have a conversation with certain people that are, completely app-oriented, you may as well try to talk to a Chinese algebra teacher. But the fact is, for the most part, you got to tell a guy, listen, you ride the horse in the direction it's going, okay? That's been going on for a lot of years. You want to trade, biotech is moving. Stay with the biotech. Be aware, be smart. Watch the price. Use the scanner to understand the price, because all the information you could ever get from watching 30 shows is on there. Enough of the Maria Bartiromo, Maria pizza on table 14. We need to get down to the bottom line of what is important. And what is important is communication. Talk about the real world here. Performance is critical. Now, one of the things about performance on something like the scanner that I think is very important is that the organizational structure that you put together is very sound. Your controls are very sound because they're risk aversion, okay? You are related to good execution, okay? And you don't have some guy who's either lucky this year or, you know, just skill. Very few people have skill. Past performance is bullshit. You can't get any future performance from past performance. Never has worked. So what you've got to look at is the fact that if you can analyze price as a man looking at something that's well organized and read the profiles and the algos you've put together, you're ahead of the game. You can wake up the smartest guy in a hedge fund and say, listen, these sectors are looking a little weak. These sectors are looking a little better. You know, I used to love the way SAC would walk in, Stephen A. Cohen. He had a room full of guys. He had guys all over the place. I've been in the room. And they had two guys trading biotech just on the short side. And he had speakers and everything else going on, all the information, all the flow. He was a showman. Like most showmen, most head traders were showmen. They get up and they'd stand there with their arms like this in front of the whole room and nod and nod and nod. Guys that are doing, I mean, you know, people that were doing the multi-billion, trillion-dollar executions of currencies. I watched a guy at New York City Corp one time. He got an order for 600 billion D-marks. He stood up, 600 million D-marks to go. He had a desk in front of him, about 30, 40 guys. Guys are raising their hand, 30 billion, 20 billion, 5 billion, 10 billion. He's just writing on a piece of scrap paper. In about 30 seconds, the 600 billion were done.
You know what?
There's nothing tremendously complicated about this.
There's a lot of cool things you said there. One of the things that I was kind of on that desk before, and it's really interesting when those types of guys are up there flailing their arms and calling the shots and everything. It's when they're right, they're king. But when they're wrong, they expect everybody on the desk to take all the stops at the right places, and it wasn't that painful. But when it bounces around, it's noisy, and it goes back their direction. They're screaming at people, standing on the hill like a general, and they have a little bit of a complex there. But I'm hearing what you're saying. Let's take a look.
Egomania has ruined more. Egomania is what's killed financial money. I mean, ego. I watch guys walking into their big buildings on Wall Street with the Daily News under their arm so they could figure out what the Met score was. They didn't read the Wall Street Journal. They go up to the desk. They got 30 screens in front of them. John, it was like a movie theater. They're watching three little numbers all day long. That's all they're watching. The rest of it is nice, but they're watching three numbers.
We're going to take our last break here and come back in 5 minutes. I guarantee you guys we're going to hit some stocks that are in the news, earnings, and we're going to look at the support and resistance levels for those stocks. Maybe you guys can make some points off of that. Eric, thanks for joining us today. It's been insightful as usual.
All right, John. Thanks, pal.
I'll talk to you a little bit later. Thanks.
Good work. Bye-bye.
Okay.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Thanks, Eric, for coming on. I just love to get a different perspective on things, a little bit more of a longer-term view sometimes. And sometimes I'll lose sight of, the insanity is the insanity, but everybody's playing the insanity. And this, like you said, you got to ride the horse in the direction it's going sometimes. Here's gold. This has been something we've just been preaching, stay away from the long side. I'm not a huge fan of shorting gold, but it's just, not acting right in the midst of all the turmoil, so to speak. And also, this is our 240-minute view. Now that gold has kind of showed its hand, and seemingly the global turmoil is getting so-called sorted out. It's just, just drifting lower. Here's the long-term weekly. Nothing good happening with this product right now. I'd love to hear everybody on TV get super bearish on gold, because then we'd probably have a chance to maybe even reverse as soon as the talking heads start their rhetoric in a large way. That would be nice to see. Let's take a look at Wells Fargo. Obviously had some news, and we're trading pre-market 57.40. This is our long-term weekly. The XLF products have done quite well. I was hoping we'd get back down below 24.50 on the XLF to start a possibility of some short stances, but the market has basically lifted this, and to some degree this thing may have driven the market also. So again, nothing to look at on the short side right now. we've got something you can hang your hat on. The inflection point here, right out of the scanner, 57.20, top of the box on the daily. But our long-term situation is now relatively bullish, as it has been. If you can, picture those Goldman Sachs, JP Morgans, Wells Fargo's, they all pull back to this maximum support area on our weekly. There's Wells Fargo. And here is Goldman Sachs. See how they pull back to these inflection points? Here's JP Morgan. And I'm not trying to just be Monday morning quarterback here. We will, there's JP Morgan's very similar situation. They were at a breaking point, and we talked about it. Put a gun to our head, take some longs. You had to put stops down below these inflection points. It's a mirror image, basically, is what it is. It's amazing how that worked out. But those were the stocks hanging in there on this is after the close Netflix today. And those were the strong of the XLF, and that's what the relative strength trading concept's all about. Here's Netflix, and here's the 97.96 support, daily support on this. The weekly, we're right there at the top of the box. Again, it's not something you probably want to roll the dice on. This is going to be after, I think this is after the close today. Yeah. So we're trading about 100 pre-market, trading above all these things. The bottom line is on this is maybe not roll the dice before these announcements today. I think this stock obviously has just been a mega winner. It's going to have to have great news to continue. So any normal news or even less than normal news is going to probably cause a big scene on this stock on the downside. But again, you probably want to trade the reaction on this instead of the initial action. Here's Delta Airlines. Did we just cover that? Here we go. Came out before the opening today. Here's the situation on Delta. Current price is $42.57. So we're coming back into some support on the daily on Delta. I think the market has a chance to slow down right here. We might see some stocks relax. That's the S&Ps in general. So, beware of buying support on stocks right now. Guys, you've been great. Thank you, Eric, again. Stay tuned for Larry Pesavento. You will thoroughly enjoy listening to him. We'll be back again tomorrow, guys. Thanks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.